Past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank. Hey everyone, Daniel Snyder here from Seeking Alpha. Welcome back to this week's episode of ETF Spotlight. We're joined once again by Geneva Investor, but this time, instead of talking about the overall tech space, we're going to dive into semiconductors and AI and get his viewpoint. So let's dive right into the conversation. Geneva Investor, want to start off, can we just talk about how you're thinking about AI? Are we in a boom? Are we in a bubble? What's your approach? Where are we in this life cycle? And how much further is there more runway to go?
Yeah, absolutely. And thanks for inviting me. So when it comes to AI, I share the same ideas of Jensen Huang, the CEO of NVIDIA. I think a couple of years ago, he shared his vision on the evolution of the space. And it's a vision that happens in phases, right? So the idea is that we are going through a first phase that I define more picks and shovels. So it's really about GPU producers. That's where NVIDIA saw the majority of its growth. And it's a first phase, right? Because it's really what you need to run AI and any applications. I think right now we are entering a second phase, which I call cloud and early adopters. Is a phase where we're seeing Microsoft growing 18% on a huge revenue base. We are seeing AWS and Google Cloud growing at 30%. And we're also seeing, for example, Meta in advertising using AI to accelerate their advertising business. So for me, it's about the first early adopters of AI. And that's probably where I would say we are at the moment, in the early stages. I think
So I was going to say, what comes next?
I think looking forward for me, we're going to see agentic AI as the next phase. So really all about AI agents. The example that I bring here is always Palantir. I think at the moment they're growing their US commercial business by something like 93% year on year. But it's not only Palantir, right? I think we are very, very, very early in this phase, if at all. But I would expect, again, companies like Microsoft or Salesforce or SAP to benefit as well. These are companies that have a big B2B footprint. They can probably upsell and cross-sell their customers various AI solutions. So I would expect that's the next phase, right? And then there's probably a final phase, which is more about robotics and full automation. So it's about the physical applications of AI, right? And that's where we're going to see applications that will have even more of an impact in the economy and in the real world. Of course, here the player that always comes to my mind is Tesla with their plays both on robotics and humanoid robots, but as well as self-driving, right? At the end of the day, it's still an element of physical AI. So that's a little bit the phases that I see. For me, we are still around the second phase, so we're still in the early stages of the AI race. We are definitely, in my opinion, not at the end of the game, right? I think one thing I write sometimes about is I think some people believe that the final goal of AI is having nice chatbots that look like humans. I don't think that's the final goal. I think the final goal is really automating, right? It's full automation. So automating jobs, both physical and not, that today humans do. And the world of full automation, I think it's fair to say we're still early on in that journey.
So relating it to the ETF space, which ETFs are you kind of looking at if you're trying to play this longer run vision of the AI race, if you will? Is there one that comes to mind?
Yeah, I mean, there are a few, right? I think that, of course, a broad exposure to tech is always a good idea, right? Something boring like QQQ. If one is to believe that AI is going to evolve exponentially, not linearly, or we're going to plateau. So if one were to be a very bullish on AI, I would say there may be a case to make about using even leveraged ETFs and leverage ETFs on semiconductors, right? So I mentioned that the first phase of AI is really about semiconductors and about the picks and shovels. I mean, you could think, oh, well, that also has already happened because NVIDIA has grown at a 40% CAGR for 10 years. So is there much more growth? For me, yes, there is much more. I think it's kind of a safe bet in that sense, because as we go through the various stages of AI and their applications, I think we're going to see increased demand for semiconductors. So that's why one, I think, good idea for investors that are, of course, bullish on the space is to be exposed to semiconductors ETFs. And there could even be a case to be exposed to leveraged ETFs. I think that's what we want to talk about today as well, right? So, yeah.
Yeah, so let's dive into that. So we're talking about, you wrote a recent article, SOXL is the ETF that you were mentioning here. That's the Direction Daily Semiconductor Bull, 3 times leveraged shares ETF. SOXL once again. Sizable assets under management, actually, looking here on Seeking Alpha, coming in at 12.2 billion currently, expense ratio of 75 basis points. So why specifically this one? Why the leverage space? Because I think people think about leverage ETFs and they're like, well, they're not for a longer term hold, right? So why this one?
Yeah, no, that's absolutely a fair question. And before I answer to you, I just want to say a disclaimer. So generally, I'm not a huge fan, or I do not recommend a lot leverage ETFs. So, again, I think for the vast majority of investors, it's probably safer to just have a broader exposure to tech via the Nasdaq 100, something like that. When it comes to AI and when it comes to semiconductor, I think that the space, right? At the moment, we are in a place where there are kind of 3 directions in front of us, right? From here, we can see AI evolving, plateauing, right? And if you think that AI is going to plateau, if you think that we're not going to see stronger LLMs in the market, and we already, ChatGPT 5 and Grok 4 are as good as we're going to get in our lifetimes, then definitely there is not a case for exposure, especially via leveraged ETF. There is a case then that can be made that evolution is going to be linear. So it may take us, still decades to reach AGI, artificial general intelligence. So if that's the case, then probably a leverage ETF is also not a good idea. Then a broader exposure is better. And then there is a case where you think, well, we might see potential. So we might see exponential growth. So if that's the case, then I think that's where an ETF like SOXL could play in hand. As you said, leverage ETFs, very high expense ratios. Also, the leverage itself makes it so that if the underlying asset collapses and there's a big crash, it's gonna take a while for you to recover. If you look at SOXL historical chart, it's not, it's kind of flat in the last, 5-7 years or so, despite the AI bubble. So definitely, as you said, it's not a long-term hold, right? I think the case for investing in such an ETF is more if someone was very bullish about AI, if they were convinced to see exponential growth coming, right? They were convinced that the next models of Gemini, ChatGPT, etc., they will be exponentially better. We might be, 1, 2, 3 years away from AGI. Then I think it would make sense, because if that's happening, I really see demand for GPUs skyrocketing, and then that's where a leverage ETF can provide more upside. But again, just as a disclaimer, I don't think it's an ETF for everyone. I think it's more for people that really have that belief. Then I think it can be an interesting play, probably with, again, a midterm at most horizon in terms of investments, right? I wouldn't hold it for more than 1 year, 1 year and a half, depending on what happens at top. Because as you said, it's very expensive, and the 3x daily leverage, you can lose your money quite quickly.
What are your thoughts on, I'm just looking through the holdings here, right? So you got AMD, you got NVIDIA, you got Broadcom, Texas Instruments, Qualcomm, Micron, tons of different individual chip names in there, amongst other index swaps and funds and the like. These companies just announced earnings not too long ago. And we've seen, and by the time this comes out, I think NVIDIA will have announced as well. We've seen these companies report earnings, and most of the semiconductor chips have actually taken quite a beating on their stock price. How are you thinking about that compared to, obviously, the big one that everybody watches is NVIDIA, and who knows what's going to happen?
I think that's a very fair question because again, someone might think, well, Nvidia is clearly the dominant player in the space. Why should they just not simply invest in Nvidia, right? And to be clear, I think Nvidia is a great company and think it will keep growing. But I think again, I go back to my vision of AI, right? If you think about it in phases, I think that there will be demand. There will be more demand as we enter in new phases for the oil market. So the pie is going to get bigger and there will be more space for more semiconductor companies to play in it. And also there will be different applications and different, GPUs themselves will need to evolve to fit different applications in AI. So up to the moment, it's all been about training, right? Training LLMs, large language models. So that's really the process of throwing a lot of data and having the model becoming smarter over time. We are already at a moment where we are going from training to inference. So that's actually the process where AI uses learned knowledge to analyze data independently and coming up with their own insights and their own decisions. So that's already a use case that is different. So the pie is getting bigger, but also different use cases. I think for me, that means there will be space for new players coming in. And I think that's why a broader exposure makes sense in this regard, because I think there will be, opportunity for more players to play in AI as we go through the phases.
So you were mentioning robotics. I'm trying to like picture the catalyst and the scenario. So it's more of as robotics becomes the next leg of the cycle, right? All those robots are going to need a ton of semiconductors to operate, and then they plug into the cloud, which is having, say, the Blackwell chips that are now being put in with CapEx. So, I mean, timeline-wise, looking forward, how long are you thinking ahead? Like, when does the robotics start of this actually begin to where we see robots around our daily lives more and more?
Yeah. Well, that's a very good question that I wish I could answer with detail. I mean, for me, again, as I said, it comes back to what do you think? Where are we going to plateau? Are we going to linearly go from here? Are we going to exponentially go from here? So I can comment on these scenarios, and then I think viewers can take their own conclusions on which one they deem more likely. For me, starting from the exponential one, which is obviously the most exciting, especially for an ETF like this one. I mean, if we're evolving exponentially, I think we might be, just 5-10 years away from really entering the last phase in terms of robotics. If you were to believe Elon Musk, which obviously doesn't have the best track record in promising and delivering, the humanoid robots from Tesla are going to go to market already beginning of next year, right? Or even end of this year. So, maybe that's a bit too optimistic, but for me, if we are evolving exponentially, then this means that potentially we are going to see very strong AI models in the next, 6 months. We're going to see robotics maximum in 5 to 10 years, really having a big presence, right, in the economy. If on the other end, you think it's more of a linear growth and evolution, then I would say we're probably decades away from that, right? Because my idea, at least, is that for robotics to really work, you really need to have AI models that work independently, right? And also the concept of edge AI, so really the AI computation happening directly in the robot in this case, or it's not only about robots, but at the edge of the network. So if that's a linear difference between linear and exponential growth is huge. So we're really talking about months versus decades. So that's, I would say, the timeline. And then the last case, the bear case, right? If we are plateauing, if everything we're gonna get, we already got everything as good as we're gonna ever get, then in that case, of course, we may never get there, right? Or we may just see niche applications of robotics as we already have in our lives, right? With the Roomba cleaning your floor or whatever, just a little bit better than that. So yeah, again, I would play it in these 3 scenarios. In the most bullish one, I would hope, I would expect to see in the next 5 to 10 years a big impact in the economy.
All right. One last question before we get out of here. Recently, it was announced that the U.S. government is taking a 10% stake in Intel. And then also there's the other flip. I think it was 15% of revenues from AMD and NVIDIA. What is your thought about that and how it might affect the space?
Well, I mean, look, in terms of how it might affect the space, I think it's not going to have a big impact. I'll be honest. I think, it's AMD and NVIDIA for me are the big players and, potentially the winners of the next phase of AI. I don't think that 15% fee to the US government is going to change massively, their research and development, their potential. I think, it's not something that you can change with a central governmental intervention. You're not going to be able to change something that is in the make for, decades of investments and so on. Intel, on the other hand, I think it's on the other end of the spectrum. I think they lost their AI race. I think it's going to be very difficult for them to catch up. The Chinese are trying to catch up since a while, and the Chinese are throwing a lot more resources than 11 billion stake or whatever it is. And I don't think that's really going to be able to change for them. I wouldn't be bullish on Intel or bearish on AMD and Nvidia because of this news. I don't think it's the space. I mean, the technology is so developed and so advanced. I don't think it's the kind of space where you can really change the future by investing, with a government investing a stake in a company. I don't think it's, I see it as noise more than anything else in the context of investing in semiconductors.
All right. Great way to wrap it up there. Everybody, Geneva Investor, give him a follow over on Seeking Alpha if you haven't already. He's always putting out some new analysts across various stock tickers and ETFs as well. So thank you all for always coming on the show. Really appreciate it. And we'll connect here again in a few months and look back on this conversation right here and see how SOXL, that ETF, that leverage, 3-time leverage ETF, which he did mention he doesn't recommend for everybody, but to be aware of if you like the AI race ahead. Everybody, thank you so much for tuning in to this episode of ETF Spotlight. We'll see you again here in the next one. Take care.